Hey, good day to everyone. In today's video, we are going to do a shallow dive into CSE Global. All right, let's go. Okay, now CSE Global is a Singapore listed systems integrator. All right, they design, they engineer, they procure, and they deliver mission critical electrification, communication, and automation solutions. All right, so it's not something that you can find in a shopping center. All right. But generally, their customers include data centers, mining companies, utilities, and transportation companies worldwide. Okay. Half of their revenues come from electrification, all right, such as EV charging stations and power distribution. And then about 27% come from communication solutions, such as radio and satellite solutions, with about 23% of industrial process control. All right. Now, the good news about CSE Global is that 69% of these revenues are recurring. They are like passive income. There are existing maintenance contracts, and that sort of keeps the business running. Okay, it benefits from revenue growth in all business areas, but also maintenance contracts and services. All right, and over the long term, it's likely to do well with trends like decarbonization, electric vehicle adoption in Singapore, as well as data center build-outs. All right, so it's like one of those companies that produces shovels, right? Shovel-based companies. It's like when they say that there's a mining boom, um, don't buy the mining company, buy the company that produces shovels for them. Market capitalization is about 400 million, not too big, not too small, right? High gross margin of 28%, which is stable over the years. Forward price to earnings ratio between 11 to 12, which is about there, all right, mid. And the price to book ratio is moderate to moderate high at 1.6 to 1.7. I have currently a position in this company, right? Okay, so let's look at the dividends and free cash flow of the company. As you could see, I'm sorry, my face is blocking some of the cash flow from operations for 2024. Okay, but generally, when it comes to dividends, okay, it paid 1.15 cents in June 2025, all right, and 1.25 cents last year in September, all right, and the price is about 73.5 cents. So moving forward, the dividend yield is not too good, not too bad. All right, in Singapore, it's about 5.5%. Okay, but most importantly, the free cash flow for the company covers the dividends that have been paid out. All right, so that's a good thing. Okay, so this is definitely a dividend play with sustainable dividends moving forward. If you look at the historical returns over the past 10 years, it's been fairly unimpressive at about 5%. Okay, standard deviation relatively high at about 29%. So there's been quite a lot of ups and downs. Okay, and so the Sharpe ratio isn't particularly impressive at 0.175. If you had timed the markets really badly for the past 10 years, you would have lost 45% of your money, and that's the amount mentioned in the maximum drawdown. Okay, the correlation against a blue chip STI index is about 0.48, which is not too high and not too low. Right? Okay, so how do we think about CSE Global? Analysts are calling for a buy with price targets about 64 to 65 cents. Very, very small, moderate kind of upside. The near-term analysts catalysts appear limited given the small margin between the current price and the target. All right, not a lot of upside left. The strengths include the diversified businesses. Okay, so imagine your businesses comes in many baskets, and you also have a lot of substantial recurring income backing it up. All right, so can't do all that badly. The weakness is that the net margins are actually quite weak. It is also a very labor-intensive kind of company, and there is some execution risk when it comes to individual projects. All right, so when you implement the system, some risk comes from it. Okay, some opportunities as we become a smart nation and there are more smart nation initiatives. Okay, more data centers and EVs. All right, and obviously there are obviously some threats, including foreign exchange exposure, competition from larger players. All right, such as Siemens. Okay, so what do we need to do if you are planning a position in CSE Global is dive deeper into data center growth in Singapore and EV adoption. Now, do note that whenever you buy a company related to data centers in Singapore, Singapore has restrictions on data center growth, right? Singapore wants to be green. So there's been a moratorium that has recently been lifted. Okay, but new data centers need to meet specifications before it can be approved, right? You need to have a conviction about EVs and decide whether this will experience high growth in the future, all right? I mean, my personal take is that I think it looks quite good, right? If you're betting on EVs. Okay. Now, if you can do a little bit more research, you might want to ask around and understand CSE Global's currency exposure. It's not easy to get hold of that information around the web. So aside from Singapore dollars, we know that there is some revenues that are in Australian dollars, and you need to take that into account, right? Right now, at the moment, when we are looking for a company, especially if you have revenues coming in that's denominated in US dollars, the US dollar is weakening at the moment. Okay, so this is a dividend play, relatively uninspiring yield at the moment. All right, so do your own due diligence before you decide whether to pull a trigger. Okay, if you like my content, subscribe to my channel. You can buy me a coffee here. If you want to listen to my life story and figure out how the FIRE movement works, sign up for my course preview here. I'm doing a course preview as early as this coming Thursday. Alternatively, you can key in ERM intro, take the first link. All right, and that's all I have for this shallow dive, and I'll see you next week for another stock. Thank you very much.